Hi my dear CFNL students appearing for November 24 exam. So this particular video we are going to see quickly what are the various amendments that is applicable for your exam. So many students have asked me, sir, please post a separate video on amendments and even the amendments material also, because that will be easy for us to quickly revise. All these amendments, even though I have covered in rocket revision, but because of the students requirement I have just posted this video separately. And also you know that from May 24 exam onwards, ICAI has given more importance to questions on amendments. So due to that reason, this particular video will help you even for the last minute revision when you want to quickly glance through all the amendments which are applicable for your November 24 exam. Compared to May 24 to November 24, we don't have that many amendments. But what ICAI has done is that they have uploaded one separate amendment statutory update for November 24 in their website. But that particular PDF is nothing but the amendments which were of May 24 only. So don't get tense, because as soon as they have seen that PDF, so one or two pages of material is there, so students got worried, etc. And also that's the reason why do not worry about that particular, because all those amendments were of May 24 only. So hardly one or two minor amendments were only there for November 24 exam. So but without further delay, let's move on to what are the various amendments that is applicable for your November 24 exam. So I have given that total, so hardly some 30 pages. In 30 pages, the entire set of amendments that is applicable for your November 24 in a quick summary form is covered. Okay, so first the supply. If you see in this supply, you all know that the specified actionable claims are covered under supply. Now, what are the specified actionable claims? So specified actionable claims, you have to remember HC block. HC block, that is horse racing, casinos, betting, lottery, online money gaming and gambling. So these are the specified actionable claims, and these specified actionable claims, if it is provided by any person, that will be covered under supply. Other than the specified actionable claims, all other actionable claims are excluded from supply. And if suppose there is some actionable claims which are covered under money definition, that is same, that is bill of exchange, promissory note, bearer check. It is neither treated as supply of goods nor treated as supply of services. Only these 6 specified actionable claims will be treated as supply of goods now. Okay, so it will always be treated as supply of goods, which means the rate of GST that will be applicable will be 28%. And here one important point also you need to know, that is what is the meaning of online gaming. So because if you see here, horse racing, casinos, betting, lottery, online money gaming and gambling is given. So what is the meaning of online gaming? So online gaming means a game on the internet or electronic network which includes online money gaming. So basically when you spend money to play the game, that is known as online gaming. But online gaming will not be coming under specified actionable claims. Online gaming will be treated as OIDAR services. So which means whatever is the treatment that is applicable for OIDR services, the same treatment will be applicable for this online gaming also. Whereas in case of online money gaming means when you deposit some money. So mainly remember, you are making some deposit of the money. After making deposit of the money, what is your expectation? The expectation is winning the money. And again, with what intention you will be playing? So with the intention of earning money. And you have to use your mind. So that is either it is based on skill, or it is based on chance, or it is both. So then it will be coming under online money gaming. Online money gaming is treated as specified actionable claims. And then as it is treated as goods, then on import of this specified actionable claim, should we pay any customs duty? No. So that's where in section 5 subsection 1 of IGST Act, the amendment has been made. Even though online money gaming is goods, on import of this online money gaming, that is the supplier is located outside India. Online money gaming is basically the betting apps which are located outside India, providing services to any person in India. So in that case, will it be treated as import of goods and chargeable to customs duty? No, it will not be treated as import of goods and chargeable to customs duty. It is even though import of goods, but it will be chargeable to only IGST. Customs Act is not applicable. So they are telling the levy will be under IGST Act, but it shall not be levied in accordance with the provisions of Customs Tariff Act. And next one, there is one circular related to sale of food and beverages inside the cinema hall. You need to remember 3 points in this regard. Point number 1. So whenever there is a person who is booking the ticket and the rate of GST for cinema ticket is 28%, and he is going to the cinema theater and purchasing the food and beverages, the rate of GST applicable for that food and beverages will be 5%. Also, suppose if he makes the food and beverages selection or purchase at the time of booking the ticket itself, even then the rate of GST applicable to food and beverages will be 5% and the cinema ticket will be 28%. However, when he makes a booking of the cinema ticket and as a complimentary he is getting the food and beverages, in that case it will become a composite supply. Two supplies naturally bundled in the ordinary course of supply, and the principal supply is movie theater, that is admission to cinema theater, and both are taxable. Therefore, the rate of cinema theatre, that is 28%, will be applicable even on food and beverages. That is what this is. Food and beverages purchased in a theatre taxable as individual supplies, and applicable to the restaurant rate, whatever it is. What is the restaurant rate? 5%, that will only be applicable. And if the same is purchased along with the ticket, then it may attract the composite supply. In such case, food and beverages will be taxable at the rate applicable to the entry to cinema hall, that is 28%. Then there is one more circular related to owning of controlling interest by the holding company. There is a holding company. So holding company, say for example, X Limited is a holding company and Y Limited is a subsidiary company. X Limited holds 60% in Y Limited. Now X Limited purchase some additional shares from Y Limited. Now in the case of this purchase of additional shares, will it become transaction between related persons, and will it be treated as supply under 71C? First of all, to become supply under 71C, it should be goods or services, and we know that securities. So shares and securities are neither treated as supply of goods nor treated as supply of services. Consequently, it will not be coming under supply. So that's what they're telling. Activity of holding of shares of subsidiary company by the holding company cannot be treated as supply of service and cannot be taxed under GST. The next area that we have is the list of goods which are covered under RCM. So how you need to remember? First, you need to remember the supplier is agriculturist and the recipient is registered person. What are they? So there are some goods or services. Four goods. Actually, we are discussing about the goods, and the notification number you remember. So in this case, you have to give the notification number 4 of 2017. So first we need to see this. Supplier is agriculturist and the recipient is any registered person. What are they? Cashew nuts, raw cashew nuts, tendu leaves, that is BD leaves, tobacco leaves, and raw cotton. This is the first point that you need to remember. Second point you need to remember, supplier is unregistered person and the recipient is registered person. What are they? Certain essential oils other than those of citrus fruit. Supplier is unregistered and the recipient is registered. Then in case of other goods, so in case of silk yarn, by manufacturer of silk yarn to any registered person, lottery by government to lottery distributor or selling agent, used vehicles, seized goods, or any confiscated goods by government to any registered person. But here Indian Railways is excluded because we know that Indian Railways is now covered under FCM. Then priority sector lending certificate by any registered person to another registered person. So basically priority sector lending certificate will come in the context of a banking sector. So these are the list of goods which are covered under RCM, and it may be given either as a standalone question or in the 14 marks question they can connect this. And we know that import of OIDR services is always taxable, and if it is imported by non-taxable online recipient, it will be covered under FCM. So who is the non-taxable online recipient? Non-taxable online recipient means, so any unregistered person, not registered person, any unregistered person, or even registered person who is registered only for deducting TDS under section 51 will be called as a non-taxable online recipient. When it is imported by non-taxable online recipient, the supplier will be paying GST under FCM. And here even we have one more amendment related to meaning of OIDR services. What is the meaning of OIDR services? So any service which is mediated over internet, and definitely it will be called as OIDR services. Basically one only. Automation is not at all an important condition. It should be mediated over internet through the information technology. So like Instagram, YouTube, advertising over the internet, providing cloud services, ebooks like OTT platforms, and Kindle, Spotify. So cloud storage, on online gaming, not online money gaming, only online gaming. So these are all treated as OIDR services. And next one, GTA services, we have an amendment that GTA has to opt for FCM. So unless otherwise they have opted for FCM, it will be by default RCM. If they have opted for FCM, then it will be FCM. By when they should opt? They should opt between 1st January to 31st March of the previous financial year. They need to opt for that, and that option will be applicable. So till the time they make a further selection. Suppose if they have opted for FCM, that only will continue. So only when they want to go for RCM, they need to change that option. But remember, the default option will be RCM option. Also, when they go for FCM, there are two rates of GST, that is 12% and 5%. 12% means with ITC, 5% means without ITC. This 12% or 5% condition is only for the supplier, not to the recipient. So which means that if the supplier want to, that is GTA want to take ITC, they will go for 12%. If the GTA do not want to go for ITC, then the rate will be 5%. But this 12% or 5%, whatever is collected by the GTA from the recipient can definitely take ITC. There is no restriction with respect to that. Whereas in case of RCM, when the recipient is paying GST, the rate of GST will be always 5%. Then next we have director services. Director services to company or body corporate is covered under RCM, where director will not pay GST, but the company or body corporate will pay. And here there is one important point. What if the director is providing service in his personal capacity? Then in that case, RCM will not be applicable. For example, director is owning a commercial property which is given on rent to a company. Now with respect to this renting, the director is not acting in the capacity of a director, but in their personal capacity. Then normal treatment for renting of commercial property, whatever it is, that will be applicable. That is, renting of commercial property will be covered under FCM. So the director will be required to pay GST under FCM. only for director services in their capacity you should see RCM, otherwise we have to interpret separately based on the service that is applicable. Then we have in case of e-commerce operator, so transportation of passengers through omnibus. Omnibus means capacity greater than 6 passengers. Remember, greater than 6 passengers. Passengers means exclude the driver's seat, and it should be by a company. So transportation of passengers in omnibus by a company, it will not come under 9 subsection 5. It will be coming under regular case wherein the supplier only will be liable to pay GST. So usually, even though it is a transportation of passenger service, but it will not come under 9(5). Consequently, supplier will pay GST. Also remember, TCS will be applicable for the e-commerce operator. Then in case of levy and collection under IGST, so there is one point, generally to become export of services, 5 conditions should be satisfied. Supplier should be in India, recipient should be outside India, place of supply should be outside India, consideration should be convertible foreign exchange. But wherever it is permitted by RBI, it can be in Indian rupee. Supplier and recipient are not to establishments of the same person. So what are the cases it is permitted by RBI? Already we know that one case, that is whenever we are providing services to Nepal and Bhutan, it is provided by RBI that it can be in Indian rupees. Also one more point, payment created in the special rupee Ostro account. So whenever there is a special rupee Ostro account which is maintained by a bank outside India, if the payment is created in foreign currency in that bank will be remitting to us in Indian rupees. Even then, it is deemed that the consideration is received in convertible foreign exchange because it is permitted by RBI. So therefore, it will satisfy the condition of export of service. Then, in exemptions, there are two exemptions which are newly added. So what are the two exemptions? Number one, generally previously transportation of goods by vessel from outside India to India, if both supplier of service, that is transporter, and the recipient of service, that is exporter, is located outside India, then in that case, so GST will be payable under RCM by the importer of such goods. But now this particular point, taxability, has now been omitted. So because of the Supreme Court decision in Mohit Minerals case, which says that if there is a transportation of goods by vessel from outside India to India, when both supplier and recipient are located outside India, then on that freight there is no GST, because remember, when both supplier of service and recipient of service are located outside India, all services are exempted now. So even this ocean freight is now given as the exemption. And then there is any person who is providing services to government authority. Government authority means who? Government authority means either any government authority, any authority, board or body which is established under an act of parliament or state legislature, or any authority, board or body in which government has invested greater than or equals to 90%. And mainly this government authority work is to carry out the functions under the constitution. So therefore, any person is providing services to government authority, only the specified activities: water supply, public health, sanitation, conservancy, solid waste management, and slum improvement and upgradation. So these 5 activities provided to government authority is only now exempted. What about any other services provided to government authority? That will be taxable. What if these services are provided to government? Anyhow, it will be exempted, because pure services provided by any person to government in relation to functions interested under constitution will be exempted. So that is these two. Then amendments to the existing exemptions. Previously, satellite launch services provided by Indian Space Research Organization, Antrix Corporation, or New Space India Limited. So these 3 only were exempted. But now satellite launch services provided by any person is covered under exemption. Also, the following exemptions is not applicable to Indian Railways. So that is interdepartmental services. Generally, we have interdepartmental services, but that is not applicable for Indian Railways. One department of the central government or state government so receive services from railways, it will not be exempted, it will be taxable. Also, services by government too, because anyhow this interdepartmental service point is not applicable for transportation, that is applicable for all other services provided by government to business entity, but that is Department of Post Services and airport or port services, and transportation of goods or passenger services will not be applicable for interdepartment. That interdepartmental exemption is not there. That interdepartmental exemption is there for services provided by business entities. So but it is specifically given here that railways interdepartmental service exemption is not applicable. Also, we have 2 general exemptions: services provided by government to business entity whose turnover during the previous year does not exceed threshold limit. Actually, this is also not applicable for transportation service. So Indian Railways, this exemption is not applicable. Also, one more general exemption is there: services provided by government to a business entity whose value does not exceed 5,000 rupees is also exempted, and this 5,000 rupees will be taken as 5,000 rupees in a financial year if it is a continuous supply of service. Again, this exemption is not applicable for transportation sector, so airport or port service or service provided by government, the Department of Post. So therefore, for Indian Railways also this exemption is not applicable. Actually, these 3 points are already there, but only thing, little bit clarity has been given. Then omission of existing exemptions, so consequently it will be taxable. Generally, import of services by RBI in relation to management of foreign exchange reserves was previously exempted, and now that exemption is withdrawn, which means now it will become taxable. Then clarifications relating to the existing exemptions. So that is pure services. So pure services provided or composite supply of goods or services where the value of goods does not exceed 25% of the total is exempted. So if it is provided to government, whether common public works department. So common public works department will be coming under government. Yes, common public works department will be coming under government. So if any service is provided by way of horticulture, maintenance of the gardens, etc. So that will be coming under exemption provided the service are provided to common public works department. Common public works department will be treated as government only. And next, District Mineral Foundation Trust, DMFT, so which is established by government, is considered as government authority, and any services provided by them will be exempted. Then these are the exemptions. So just these are the amendments in the exemptions. One more important point is electricity point. So generally there are some malls, airport operators, real estate owners or real estate developers or resident welfare association will be providing the electricity to the members, and they are recovering some amount towards the electricity charges. Whether this electricity charges should be included in the value or not. Point number one, suppose if this electricity charges is the members' electricity charges which is paid by the association or paid by the supplier and recovered from the recipient, then in that case it will become pure agent and it will not be included in the value. What if it is the common area electricity charges which is paid by the member, like paid by the association or paid by the supplier and recovered from the recipient? So if the actual charges are recovered, for example, if the electricity charges is 10,000 and what they recovered is only on actual basis 10,000, so then it will be deemed to be pure agent. Again, it will not be included in the value of maintenance charges. What if some ad hoc amount, that is usually electricity bill will be for 2 months once, but without actual reference. So randomly some amount like 1000 rupees or 500 rupees is being collected. So on ad hoc basis when it is collected, this will not be treated as pure agent expenditure. So that ad hoc amount will be included in the value entirely. And when it is included in the value entirely, if it total maintenance charges exceed 7500 rupees per month per member, then entire amount will be taxable. Then next point that we have is in time of supply. Generally time of supply in case of goods is due date of invoice or actual date of invoice, whichever is earlier, because of the notification 66/2017. However, in case of person opting for composition scheme, this notification 66/2017 is not applicable. So we need to take due date of invoice or actual date of invoice or date of payment, whichever is earlier. Now there is an amendment that for online money gaming, that is specified actionable claims also, the due date or actual date or date of payment, whichever is earlier, which means that a person who is providing specified actionable claim, whether they need to pay GST on advances, yes. Even though specified actionable claims are goods, I told you, so GST payable on advances, because so even for composition scheme dealer and specified actionable claims, this notification not applicable. So GST is payable on advances for them. Then next point, place of supply. In place of supply, there is a new point that is added, 10(1) CA. This 10(1) CA is applicable whenever the supplies are made to unregistered persons. So in case of 10(1) A, supply involves movement of goods. Usually ending point will be taken as a place of supply, that is now for a registered person. Whereas to an unregistered person, we need to see location of recipient in the records of supplier, otherwise location of supplier. Same way, supply does not involve movement of goods, 10(1) C. So to registered person, it will be location of goods. Whereas to unregistered person, it is location of recipient in the records of supplier, otherwise it will be location of supplier. Then next one, in case of transportation services, for section 12, transportation of goods for section 12, in case of B2B, location of recipient, B2C, starting point of the goods. Even for transportation of passengers, section 12, B2B, location of recipient, B2C, starting point of the passenger, that is clear. But in case of section 13, for transportation of goods, we don't have any specific provision, general provisions, whereas in case of transportation of passengers, it is just the starting point of the passenger. So this is the amendment that is now applicable. For section 13, previously we had a specific provision, but now they are telling only general provisions are applicable. Then circular relating to place of supply in case of service of advertising sector. This point is already tested in the previous exam, May 24 exam, but you should be knowing this. So even if not for IBS, but if not for IDT, it may be useful for IBS. So place of supply in case of service with respect to advertising sector. So in case of advertising sector, usually two supplies are involved. So I am a property owner and I am allowing another person to place a hoarding in my property. Now whatever money that I am receiving, that will be coming under service in relation to immobile property. Whereas that particular person who already owns a hoarding, so he will be providing the advertising services to his customer. So that will be coming under not service in relation to immobile property, that will be general provisions. So wherein location of recipient will be taken B2B, otherwise location of recipient in the records of supplier, otherwise location of supplier. Whereas in case of co-location services, this co-location services point is actually not given in the amendments material, but it is also an amendment, so which is applicable for you. So generally in case of co-location services, just the place is given on rent, then it will be coming under service in relation to immobile property, and that will be taken as a place of supply, accordingly location of immobile property. Whereas along with the property, that is working space, co-working space, they are also providing the additional services relating to hosting, IT infrastructure, backup facility, firewall, monitoring and surveillance. Then it will not be just mere renting of immobile property, so therefore we need to apply the general provisions. Then in case of import of OIDR like online money gaming services. So online money gaming services section 14A. Remember this point, there is an online money gaming supplier located outside India providing services, online money gaming supply, that is goods actually, providing online money gaming to any person located in India. Then the person who is located in India will not be paying GST even though he is registered. So the online money gaming supplier who is located outside India only will be paying GST. So liability to pay GST is on the supplier located outside India on import of online money gaming by any person in India. Now that particular supplier who is supplying online money gaming, do we have his, whether he is having any physical place of business in India? Yes. Then he will apply for simplified registration and pay IGST. Otherwise, whether they have a representative in India, yes, such representative can apply for simplified registration and pay GST. Suppose if no, they will appoint a representative and they should register. So they shall appoint, not may appoint, they shall appoint a representative, register and pay IGST. Suppose if the supplier is not complying with these provisions, then their information or website or application will be liable to be blocked for access. Then next we have in segment 8, value of supply. So we have 2 points, personal guarantee and corporate guarantee. Generally personal guarantee which will be given by the director to the company, so for which usually no consideration should be collected as per RBI circular, so therefore the value will be taken as nil. Whereas in case of, that is as per circular, whereas in case of corporate guarantee will be chargeable to GST and consideration will be collected or not. So value will be always 1% of the guaranteed amount or the actual consideration involved, whichever is earlier. This is between related persons because rule 28 is applicable in this case. However, if the recipient is eligible for full ITC, usually transaction value will be deemed to be the open market value, but like that provision we don't have in case of corporate guarantee. Okay, so that is what 1% of the amount of such guarantee offered or actual consideration, whichever is higher, should be taken. Then next, in case of specified actionable claims, that is rule 31B we have for online money gaming. Again, this area already tested in May 24, so I don't think so it will be again be repeated, but it will be useful for other IBS paper as well. So rule 31B and rule 31C talks about valuation in case of online gaming, and that is online money gaming, including online gaming and supply of actionable claims in casinos. So therefore what should be taken? Simple, whatever is the amount that is deposited should be taken as a value. On that only GST will be payable. On that amount deposited, if there is any winnings, so on that winnings GST is not payable. On the amount deposited, if there is any withdrawal, for example 10,000 deposited and 3,000 withdrawn, so now 10,000 already we have paid GST, will we get refund with respect to GST for 3,000? No. So 10,000 means 10,000 only will be chargeable to GST. The incremental income, so there won't be any GST. Even if there is any reduction also, there won't be any refund of GST with respect to that. That is this point. Then input tax credit, now we have got one point which is now coming under exempted supply. Supply of warehoused goods, so will be not a supply but treated as exempted supply. That is basically in that point what is clearly they are mentioning is that if there is a duty free shop, where is the duty free shop? Located in the international airport. If they are making sale of goods to the incoming passengers, that is treated as supply of warehoused goods under customs. So that even though not a supply, but it will be treated as exempted supply for the purpose of reversal of ITC, both under rule 42 and rule 43. Then circular on replacement of parts during warranty. So first point you need to remember is that usually any goods purchased and which are given for replacement during warranty period, so on that goods purchase we can take ITC. Okay, there is no restriction whether we collect the consideration for that goods replaced during warranty or not. So but ITC will be available. If consideration is collected, GST payable on that consideration, otherwise GST not payable. But there is no disturbance with respect to the ITC on goods purchased and replaced during the warranty period. Also, suppose if in case of car dealers, if the dealer is purchasing, can he take ITC? Yes. If the manufacturer is purchasing the goods for warranty to be done by the dealer, then the manufacturer can take ITC. So basically remember, usually the free replacement during warranty will be done by the dealer. If dealer purchase, he can definitely take. Even the manufacturer purchases, but the dealer is doing replacement during warranty period, manufacturer also can take ITC. So this is about that. Okay, in detail we have seen this in rocket revision also. So just remember that point. Then another issue here is that, so whenever we are purchasing the warranty separately, additional warranty separately, so that additional warranty separately purchased will be treated as an independent supply if the warranty is purchased independent of the purchase of the product. At the time of purchase of the product itself, we paid extra money for warranty. Whatever is the rate of GST that is applicable to the product will be applicable for the warranty. But if we are paying separately for the warranty, so which is not otherwise, that is apart from the purchase of the product, separately we are paying, then in that case the separate rate of GST, that is 18%, will be applicable for warranty. Then generally in case of ISD, input service distributor, so now there is a relaxation that input service distributor concept is not mandatory. So it is optional. Either they can go for input service distributor or they can go for cross charge. Cross charge means one office will be raising invoice to the other office and they will in turn raise invoices to the other offices, that is cross charge. But important point here is that these services should be attributable to the branch offices. So normal invoice can be raised by head office to branch office, not necessary to raise ISD invoice. So because of which turnover ratio need not be followed, but these services should be attributable to branch offices. Then usually when these are with respect to procured services, whereas what if there are some self-generated services not procured from third party. Self-generated services means some employee cost which is incurred by the head office and recovered from the branch offices. Suppose if the branch office is eligible for full ITC, whether amount is recovered or not, usually as per rule 28, so we need to take open market value deemed as transaction value, so therefore the value can be nil also. Whereas if the branch office is not eligible for ITC, so and amount is recovered from the branch office by the head office, so then open market value should be taken. What if amount not recovered? So this is the circular. They are creating an exception to rule 28 which says that generally we need to take open market value, but in this case there is no value of taxable supply. Then next, composition scheme, one important point only, that is generally, so 10.1 and 10.2 a composition scheme is not applicable in case of S9 RCM. So for 10.1 it is S9 RCM, for 10.2 it is 9 RCM. In that E point, previously supplier of goods and services through e-commerce operator not eligible for composition scheme, but now supplier of services through e-commerce operator only not eligible for composition scheme, but supplier of goods through e-commerce operator is eligible for composition scheme. Then in case of invoice, debit notes and credit notes, there is one amendment, that is generally recipient details should be always be mentioned in the invoice, but in case of B2C supply and the value is less than 50,000, not equal to 50,000, less than 50,000, and it is a B2C supply, so invoice details, in the invoice recipient details not required. If the recipient is insisting, we need to mention, otherwise not required. However, in case of services through e-commerce operator, OIDR service and OMG, that is online money gaming, definitely recipient details needs to be mentioned. Okay. So then e-invoice limit, we all know that it has been revised to 5 crores. So if the aggregate turnover between any previous year from 17-18 onwards, if it does not exceed 5 crores, e-invoice not required. If it exceeds 5 crores only, e-invoice is required. Also, whenever we are making supply to government departments or PSUs which are registered only for the purpose of deducting TDS, so whether they are treated as registered persons, yes. B2B supplies only invoice is required, so they are treated as registered, and therefore e-invoice will be applicable in this case. But of course, the condition we need to satisfy that the aggregate turnover during the previous year should not exceed 5 crores or exceed 5 crores. If it does not exceed 5 crores, e-invoice is not applicable. Then, in case of registration, compulsory registration, section 24, there is one point. Generally, so I creations compulsory registered. In this O point, OIDR supplier located outside India making supply to non-taxable online recipient in India is compulsorily required to get registered. Same way, online money gaming supplier who is located outside India making supply to any person in India is also compulsorily required to get registered. And then one more amendment is that generally supplier of goods through e-commerce operator is compulsorily required to get registered. However, if that person is unregistered, still they can supply goods through e-commerce operator, provided they are making only intrastate supplies. They should not make interstate supplies, and they should not make supplies through e-commerce operator in more than one state, and they should declare permanent account number and obtain a enrollment number, and using that enrollment number only they will be able to make supplies through e-commerce operator. And enrollment numbers is to be valid from the date on which they are required to get registered, that is whenever they granted registration after crossing aggregate turnover. So till the date they are not crossing aggregate turnover, so they can continue to supply through e-commerce operator, but they should get a unique enrollment number. They should not make interstate supplies. So this is the basic condition here. Then next, one more point we need to remember is that section 23 overrides section 24 and 22, which means when a person is exempted from registration, they are exempted from registration, and even though they are covered under compulsory registration, but they are exempted from registration only. Then with respect to procedure for registration, we have few amendments. So before that, physical verification, before this amendment, physical verification, the applicant should be present in the premises. But now that presence of applicant at the time of physical verification of premises is not mandatory. If the applicant is not there but any other person is there also, it is sufficient. Then whenever physical verification is to be done before granting registration, so or after granting registration, so both places the physical verification can be done. If the physical verification is done before grant of registration, what is the time limit within which the physical verification should be completed? Within 30 days from the date of application. So at least 5 days, 5 working days before completion of the time limit, they need to complete the physical verification and upload the physical verification report. The proper officer shall get the physical verification of place of premises done, and the verification report along with the other documents including photographs shall be uploaded in the prescribed form on the common portal at least 5 working days prior to the completion of the time period specified in the said provision. Whereas in case the physical verification is done after grant of registration, then the period will be 15 working days from the date of such verification. They need to upload the report. And then one more point, usually we need to submit the bank details at the time of registration, but we have relaxation that the bank details can be submitted even after. What's the time limit within which the bank details should be submitted? Within 30 days from the date of registration or date of filing GSTR1, not due date of filing GSTR1, date of filing GSTR1, whichever is earlier, that is the time limit by which bank details need to be furnished. So previously it was 45 days and now it is 30 days, but it is not applicable to those who are required to deduct TDS under section 51 or TCS under section 52, means TDS deductor and TCS collector, so has to definitely give the bank details, and contravention of these provisions lead to suspension of registration, and automatically, like whenever the bank details are furnished after suspension of registration, the suspension is automatically revoked. And then we all know that online money gaming supplier, there is a simplified registration. Online money gaming supplier located outside India, making supply to any person in India. Okay, so making supply to any person, so not necessary that the person should be registered in India, so to any person in India. So there is a simplified registration scheme that will be applicable to that OMG supplier. Then risk-based biometric Aadhaar authentication started as pilot project in Gujarat. Now it is extended to Pondicherry and Andhra Pradesh. What is the amendment in time limit for rectification of cancellation of revocation application? So previously revocation application needs to be filed 90 days plus 9 days. Now like 30 days plus 30 days plus 30 days. Now it will be 90 days plus it can be extended for a further period of 180 days by commissioner or additional commissioner or joint commissioner. Remaining points and all will be same. Then in GST payment process, interest. So generally whenever we are computing the interest on account of wrong availment and utilization of ITC, so we will call the ITC utilized in the month in which the balance in ITC falls below the wrongly availed ITC. So should we see headwise or total? We should see total. When it is IGST, we should see total. That is CGST, SGST, IGST, total, all these three credits total we need to see. If it is IGST credit wrongly availed. If it is CGST credit wrong availed, see the heads of CGST and IGST. If it is SGST credit wrongly availed, see the heads of SGST and IGST. Suppose if it is like IGST wrongly availed, can we take GST compensations as? No. Even though there is some GST compensations as balance, that should not be taken into checking for the purpose of utilization. So remember, so whenever the balance in ITC falls below the wrongly availed ITC, to that extent only it has been utilized. So while seeing the balance, we should see the balance under all the three heads. If it is IGST credit wrongly availed, if it is CGST credit wrongly availed, CGST and IGST. If it is SGST credit wrongly availed, SGST and IGST, but ignore the compensation cess. Then this is e-commerce operator. What is the compliance to be followed? There is a supplier who is supplying goods through e-commerce operator to the recipient, and the supplier is under composition scheme. Yes, now the person who is making supply of goods through e-commerce operator can opt for composition scheme, but they should not make interstate supplies, because if they make interstate supplies, they are disqualified from the composition scheme. So what is the compliance to be followed by e-commerce operator? E-commerce operator should not permit the supplier to make interstate supplies and should deduct TCS and should declare the details in GSTR 8. And this TCS deductor will be remitted to government, and that will be reflected in the supplier's electronic cash ledger, and it can be adjusted with the liability of the supplier. Anyhow, it comes in electronic cash ledger only, not credit ledger, so no issue. Whereas in case of a person who is unregistered, there is an unregistered supplier who is supplying goods through e-commerce operator, and that unregistered supplier's aggregate turnover does not exceed threshold limit, but they should obtain a unique enrollment number. And what are the compliance to be followed by the e-commerce operator? They should not allow the supplier to make interstate supplies, and they should allow the supplier to make supplies only after obtaining unique enrollment number. Interstate supply should not be made, and TCS is not required. Why TCS not required? Because the supplier is unregistered, so TCS not required. But even then, the details should be declared in GSTR 8. GSTR 8 is a TCS return. And then if there are multiple e-commerce operators, so there are multiple e-commerce operators, which e-commerce operator should deduct the TCS? Say for example, there are X, Y, Z, and e-commerce operator 1 and e-commerce operator 2 and ABC are the buyers. So sellers XYZ and the buyers ABC, sellers XYZ. There is e-commerce operator 1, e-commerce operator 2. Now, which e-commerce operator should deduct the TCS? So e-commerce operator 1, seller side e-commerce operator should deduct the TCS. Okay. So such e-commerce operator who finally releases the payment is liable to deduct TCS. Each e-commerce operator involved is required to pay GST on the commission earned by them. Of course, this e-commerce operator, both ECO and ECO2 will pay GST on the commission. Whereas there is one important point here, simple point only, that is if the seller XYZ, so instead of seller XYZ, if the seller is X, and the e-commerce operator is also X, that is supplier and e-commerce operator is same, then how many e-commerce operators are there really? Only one e-commerce operator. Why? Even though namesake there are multiple e-commerce operators, but in reality there is only one e-commerce operator, because this ECO1 and the supplier is one and the same. Then in that case, which e-commerce operator will deduct TCS? Only e-commerce operator 2 will deduct. However, in case when supplier side e-commerce operator is same person, supplier and supplier side e-commerce operator is same person, then there is only one e-commerce operator. that is buyer side e-commerce operator, and they are required to deduct TCS. So based on this, there is one question in RTP November 24. So they gave one good question on this. So that's why I have just included, because simple logic. The logic is that when it is called as supplies through e-commerce operator, so it is called as supplies through e-commerce operator only when the supplier and the e-commerce operator are different persons. Here, as these two persons are same, so we have only one e-commerce operator, so they will only be deducting the TCS. Then next, in returns, we have Rule 88D. Rule 88C was already there. Rule 88D they have added, that is if the ITC in GSTR 3B is greater than the ITC in GSTR 2B, so then there will be a notice in DRC 1C. So remember 88D before alphabet A, DRC 1C, it will be either uploaded in the portal or sent to email. Within 7 days, we need to give reply in part B of the same form, either pay the difference or explain the difference, or partial payment and explain the balance. Suppose if nothing is done, so then they will issue a notice. The recovery proceedings under 73, 74 will be initiated, whereas in case of 88C, direct recovery will be there, but here 73, 74 will be there. So first they will give a notice and again pass an order, and then only the recovery will be initiated. Till the time they are paying this difference or explaining the difference, so they are not allowed to file GSTR1, means GSTR1 will be blocked, and once GSTR1 is blocked, so then GSTR3B is also blocked. If it is blocked for 2, like if they are not filing GSTR1 and 3B for consecutive 2 tax periods, automatically e-way bill also will be blocked, and this will also lead to suspension of registration. So even if bank details are not furnished within the time limit under Rule 10A, it leads to blocking of GSTR1. Then online money gaming supplier is required to file GSTR 5A, like OIDR supplier located outside India. How they will file GSTR 5A by 20th of the month following every month. Same way, online money gaming supplier also will be required to file GSTR 5A by 20th of the month following every month. Then in case of refund, there is only one simple point, that is in case of certain notified goods. So refund under both the options is not applicable. What are they? So pan masala, tobacco and tobacco products, certain essential oils other than those of citrus fruit. So these are some notified goods on which refund cannot be claimed on export, both the options. Then in case of assessment and audit, so best judgment assessment order, usually once a best judgment assessment order is passed under section 62. So 62 is when that is best judgment assessment orders on non-filers of return. So this will be applicable under section 62. What is that 62? Best judgment assessment orders on non-filers of returns. Okay, best judgment assessment order on non-filers of returns. So in case of best judgment assessment order on non-filers of returns, so we have still an option to file the return, and the best judgment assessment order will be withdrawn. Previously the time limit was 30 days, and now the time limit has been extended to 60 days. And also it can be extended for a further period of 60 days upon payment of a fee of 100 rupees per day. The regular late fee for filing returns that will be payable, plus this is extra. So beyond 60 days, first 60 days no need to pay late fee under this section. Otherwise we need to pay 100 rupees per day beyond 60 days. Okay, so 60 days plus 60 days plus 60 days. So 60 days basic amount, beyond 60 days for a further period not exceeding 60 days, but there it is 100 rupees per day. We don't have any maximum amount etc. and all in this case. Then in case of search seizure, so here for imprisonment we have the revised imprisonment cases. So what are the revised imprisonment cases? I bid. I for invoice default, C for collect amount as tax not paid within 3 months, erroneous refund, books of accounts default, ITC default, dealing in goods liable for confiscation, plus attempt to commit or abetting commission of this I bid. And collected tax not paid within 3 months is not an offence for imprisonment. Now what will be the imprisonment table? If it is books of accounts default, up to 6 months or fine or both. In other cases, more than 1 crore up to 1 year, more than 2 crores up to 3 years, more than 5 crores up to 5 years, and minimum will be 6 months and fine will be there. And this more than 1 crore is applicable only in case of invoice without supply, not for other cases. In all these cases, if it is subsequent imprisonment up to 5 years and fine, and minimum will be always 6 months. Then we have compounding of offences. So whenever there is a compounding happens, there will be immunity from prosecution, that is imprisonment. But compounding is not possible in 2 cases. First time compounding as well as compounding itself. This section is not applicable in 2 cases. If it is invoice without supply, supply without invoice, this is applicable. Invoice without supply or the prosecution order, that is imprisonment order already passed. And in other cases, all other offences, so first time compounding is possible, but subsequent compounding for any offence is not possible. So which means compounding can be exercised only once in the lifetime of a person. And what will be the compounding fee? So the compounding fee, remember, if it is books of accounts default, dealing in goods liable for confiscation or attempt to commit or abetting commission of the offences, that is ICE bid, then it will be flat 25% if the amount exceeds 5 crores or does not exceed 5 crores. Suppose if it like other offences, if it exceeds 5 crores, 50 to 75%. If it does not exceed 5, exceeds 2 crores, then 40 to 60%. Exceed 1 crore imprisonment is there, but that is not applicable for all other offences. That is applicable only for invoice without supply, and invoice without supply compounding is not possible. That's why 1 crore point is not given here. And once we pay the compounding fee, there will be immunity from prosecution. Even if any proceedings are already started, it will stand abated, so means it will be dropped. And next one, so here suppose if there is a person who is doing both books of accounts default also, other offences also, if it is covered, then definitely the highest penalty, that highest compounding fee is only applicable in this case. Then penalty on e-commerce operator, there is a e-commerce operator, so who is covered under section 122B, so there is a penalty. So if he is allowing unregistered supplier to make interstate supplies, or he is allowing a person who is under composition scheme to make interstate supplies, or if the e-commerce operator is not furnishing GST or aid, then 10,000 rupees or tax involved, whichever is higher, will be taken as the penalty. Then next, demand and recovery. So in case of provision attachment, usually provision attachment will be for a period up to 1 year. So whenever there is a pendency of proceedings, there will be provision attachment made by the officer with respect to the assets, either movable or immovable property, but that will be for a maximum period of 1 year. Now what will happen whenever the officer orders for provision attachment with respect to, say, motor vehicles or property, etc., there will be an encumbrance that will be placed on the particular motor vehicles and the property. Also, the regional transport officer or the registrar should ensure that this property is not transferred, either the motor vehicle is not transferred or the property is not transferred. But automatically what will happen, whenever the provisional attachment is dropped, they have to intimate to the authority. If they are not intimating, automatically on expiry of 1 year, so it will be withdrawn. The revenue authority means registrar, or the transport authority, RTO, or any such authority who has placed encumbrance on the movable or immovable property on the order of the commissioner shall remove such encumbrance on the written instructions from the commissioner to that effect, or an expiry of period of 1 year from the date of issuance of order under sub-rule 1, whichever is earlier. So whenever it is given by the officer, or 1 year, because after 1 year provisional attachment cease to hold effect now due to that reason. Then in ethics and other provisions, one small point is there. Usually there is a content based sharing of information, that is, so whenever these people, banks, financial institutions, etc., and all, for loan applications, so we have to share our GST details, income tax returns, GST returns, etc. Now we don't have to download the returns and then share with them. So if we give the content based sharing of information to either account aggregators or public tech platform for frictionless credit. So previously account aggregators were there, now they have added public tech platform for frictionless credit, which is a subsidiary of RBI. So basically there is a user who will give the consent to share the data, to whom they will give to these people. So these people will grab the information from financial information providers like banks or NBFCs, like bank statements, mutual fund statements, insurance provider, income tax or GST platform. This data will be grabbed and it will be given to the banks where you are applying for your loan, banks or personal finance management or wealth management or robo advisors, etc. So basically previously we had account aggregators, and now they have added public tech platform for frictionless credit. So these are the various amendments that you have for GST. Then when it comes to customs, in customs we have deferred payment of custom duty, one small amendment, that is usually what is the due date. So if it is 1st to 15th, 16th working day of the month, if it is between 16th to end of the month, next month first working day, like that we have now. So that particular due dates can be extended in case of exceptional circumstances by the central government by way of notification. Also, usually this facility will not be applicable if the goods are not reported in the bill of entry. Goods are not assessed or not declared by the importer in the bill of entry, deferred payment not applicable. So whenever the department catches so these particular goods, so they will be ordering, that is for example, you are continuing in the deferred payment and you imported some goods, smuggled some goods. Now in case when you smuggle the goods, automatically deferred payment facility is withdrawn. When the deferred payment facility is withdrawn, it means that it is not permanently withdrawn. For the smuggled goods, when the reassessment is done, as per the reassessment, if you are making payment within 1 working day, when you pay as per the reassessment order within the 1 working day from the date of the order, then automatically you can continue with the deferred payment option. Okay. Then electronic cash ledger and electronic duty credit ledger regulations, which was already there for May 24, so will be applicable for November 24. So these provisions in detail I have given in my rocket revision. So you just click on this link and you can watch at 25th minute. So it is there in this day 2 video. Okay, day 2 video I have discussed this concept. It will take some 20 minutes like that. So go through that particular concept. It will definitely be useful. If you have already learned, leave it, no issue with respect to that. Then when it comes to FTP, some small amendments are there. That is import of second-hand goods. Generally import of second-hand goods, there are some notified goods like diesel generator sets, laptops, refurbished computers, parts, etc. So in that list, they have given one more thing, used IT assets, that is laptop, desktop, monitor or printer imported from SEZ to DTA is now notified in this regard. So therefore, import of these goods now require license. So these are restricted. So from where to where? SEZ to DTA. SEZ to DTA will be treated as import. So now it is requiring restricted. That is used IT assets, not new ones. Used IT assets like laptops, desktop, monitor and printer, etc. Then merchant trading. Merchant trading means you are in India, you are purchasing, like you are making a sale from one person outside India to another person outside India. That is allowed. Merchant trading is allowed in India. We don't have any restriction. But merchant trading is not possible with respect to goods in sites and goods in comet items. So what are these goods in sites? So conventional international trade in endangered species of wild fauna and flora, like certain endangered species, you are not allowed to do merchant trading. And comet items like special chemicals, organisms, materials, equipment and technologies like weapons, bombs or guns, etc. You are not allowed to do even merchant trading. Like, so you are selling guns from Germany to Australia, that is not allowed in India. Being in India, you are not allowed to do that. That is the meaning of that. So but previously they were telling like any goods other than these sites and comments, any other goods can be made merchant trading. You can buy from one foreign country to another foreign country. What if I am purchasing from the same foreign country and I am selling to a buyer in the same foreign country? Is it possible? Yes. So merchant trading within one specific foreign country is also allowed. So seller is also in Australia, buyer is also in Australia. So you can do merchant trading being in India. But again, these two goods, it is not possible. Then RODTEP benefit. So previously we are not eligible like for certain cases. So like previously products manufactured in 100% EOE or units in SCZ, FTZ or SCZ, or products manufactured in EHTP or BTP, or products exported in discharge of obligation under advance authorization or duty free import authorization. These three previously RODTEP benefit were ineligible, but now it is allowed, which means in these three cases, so you can claim RODTEP benefit even though the goods are manufactured in EOU or FTZ or SCZ or EHTP, BTP, or exported under obligation of AAA, advance authorization DFIA. If it is notified for RODTEP, definitely you will get the benefit. Okay. Then non-compliance of mandatory quality control orders. That is, there are some goods, notified goods, which requires to comply with mandatory quality control orders like BIS hallmark or ISI or ISO, etc. There are certain quality control compliance we need to follow. But in case of imports by advance authorization holder, EOU or SEZ, they are not required to comply with quality control standards. They are not required to comply with quality control standards. Remember, generally there are some notified goods which are manufactured or imported into India should comply with the quality control standards. But if the goods are imported by advance authorization holder, EOU or SEZ, they are not required to comply with quality control standards. There is a relaxation, but they have to comply with additional conditions. Simple. So basically those goods should not be consumed in India. Those goods are sold outside India. It's okay. We don't have to bother about the quality control. Quality control, we need to bother only about the goods which are consumed in India. So for AAA holder, they are telling pre-import condition. First import it, even though there is no quality control, it is okay, and use it in manufacture of goods, and those goods should be exported, not deemed exported. Exported means it should not be consumed in India. And whatever unutilized goods, so cannot be exported, but should be destroyed or re-exported. Okay, unutilized goods, so that cannot be exported, that is present in the finished goods, can be either destroyed or it can be re-exported. Then inputs used for export, for EOE also same condition, inputs used for export production, no clearance to DTA, and they need to submit an undertaking at the time of import. For SEZ also same, input should be used for export production, no clearance to domestic tariff area, and they need to submit the undertaking to the development commissioner. These are the simple things. Okay, so with this, all the amendments for November 24, see basic, like these are some nominal points which are there, so which usually in FTP this will not be tested and all, but I have included. So don't worry, these are the only amendments that are applicable for your November exam. So prepare well and go for the exam. So I have just made a quick revision of this because in detail I have already covered in rocket revision and other things and all. So this is just a quick recap of your exam. So all the best for your exam. Do well.